Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can better understand not only what we see in the global landscape, but also how we're currently positioned, whether we're putting a little bit more risk on or we're actually being more conservative than we actually have been over the last 3 months or so. U.S. economy continues to see signs of more weakness, and a lot of the rally that's been fueled really primarily by the S&P this year has been about hope, and hoping that Ben Bernanke is going to come with more quantitative easing to prop up the economy temporarily in the markets. Hope that Europe, Mario Draghi, or Super Mario as we call him, is going to prop up the economy over there. Unfortunately, the natural effects of an economy that is growing eventually is going to have to slow for some point. It's kind of like a runner. You know, you can't run 24 hours a day if you're a jogger or you run for exercise. Eventually, you've got to slow down and walk and regain your strength, and then you can start running again. The U.S. economy is no different. The world economy is no different. Unfortunately, you know, up until about 2006, 2007, the U.S. economy and the world economy just ladled on a lot of debt after debt after debt, and really never had the fiscal house in order and making sure that future payments for things like Social Security, Medicare, and the like around the world are really accounted for. So ultimately what we have is we have a extremely weak and actually getting weaker European economy. Signs that came out of China this morning are showing that their economy is slowing down. And that's one of the strongest economies in the world on the emerging market side. In the U.S., we continue to see signs that things are slowing down. Now ultimately, will this be a summer slowdown, or is this actually going to be a full-blown recession that's going to be pretty nasty? We're going to err on the side of conservative simply because our relative strength ranking kept us conservative as we went into the month of August. Now the stock market, especially just really the S&P, has really just done very well, and I talked about this earlier. Primarily the S&P and the large cap stocks are kind of the cleanest shirt in the dirty laundry basket, and money that is going into the market seems to be just clinging to one area in hopes that there's going to be more stimulus. We do not invest on hope. We don't invest on false rumors. We really look at statistics and good data. And again, the data keeps getting weaker. Eventually, our economy, if it keeps getting weak, will definitely be in that recession that I talked about back on July 7th. Our government's never ever been able to stop a recession or keep us out of one. Again, it's like running. If you run for an hour, you're going to have to slow down and walk a little bit to regain your strength, and you can start running again. If you're doing 85 and a 65, you can't do that forever. You got to slow back down to the speed limit, and then again you can speed up again. That's the world economies in a nutshell. So the natural progression is, we never really came out of the last really depression we had back in 2008, 2009, and because of the false stimulus from our government propping things up. GDP growth in this economy is anemic at 1.5%. The job growth really isn't there. The numbers that came out last week were just really okay, nothing great. And at the end of the day, we really need to grow jobs and then get our fiscal house in order, which is going to be our government. And the same thing holds true in Europe. You can spend your way, you could try and spend your way out of problems, but unfortunately more debt on more debt just doesn't solve it. So we're going to be conservative. I'd rather be conservative and not lose 40 or 50% of our clients' money. And at the end of the day, if you're 7 years old, you're a 20-year investor. If you're 60 years old, you're a 30-year investor, and so on. So whether or not you lag a little bit or you outperform for a month or two, in our book doesn't really matter. What we're more concerned about is the next 1, 2, 3 years, that we make sure we have capital preservation intact. And when things are ultimately cheap, and if things run the course as we anticipate, and there is a big market sell-off in a recession, well then we'd be well positioned to grab great bargains at bargain basement prices and ride up for higher returns. If you have questions about your portfolio, of course, give our office a call if you're a client. If you're not a client and you'd like to talk to us about becoming a client, call our office for a consultation. We always like taking on new clients who are nice people who want to better their situation. Make sure you listen to this Sunday show. It's going to be fabulous. And of course, make sure you listen to my live TV show on Southwest Florida every Wednesday live from 6 to 6:30, and a replay of that on Sunday nights at 7:30. Go to our website, ResneyWealth.com, for a list of stations and times, and have yourself a safe weekend, and we'll talk to you next week.